Welcome back to What Would It Cost? Today we're talking all things real estate investment.
And with the Kingpin from Kingston, Mr. Nick Gilmour, it's an honor to have him on our show today and talk some knowledge.
You bought a shed in Windsor?
You made money in the housing market last year? No way.
Anything you shot on, you would have made on.
What would it cost?
That's the $1 million question. You're looking at North Bay now is at $1 million. I don't even think they hand you the keys anymore. What is it going to cost?
How much? Hi, my name's Nicholas Regina.
My name's Michael Sakuro.
And you're listening to
What Would It Cost?
Is that good?
Hey, I appreciate you guys having me on. This is an awesome opportunity, and I'm excited to chat about some stuff.
Absolutely.
Yeah, it's exciting because we deal with a lot of real estate investors, but not with as many as like a portfolio of yourself, especially in a different market that we're so much used to with our clients, given we're local to the Vaughan, Toronto area. So it's great to have you on.
And with there being so much hype in and around outside markets heating up due to what's happened through this pandemic, give us an insight and some good information on what's happening in the city of Kingston.
Absolutely. So, I mean, Kingston is a special market because, number one, we have Queen's University. So Queen's University is... obviously, we're a crazy university town. We're seasonal with, when people come in, when they leave. But what that does is it drives the real estate prices up in specific areas.
Right.
Yeah.
Okay. So on top of that, so if we don't even talk about what's happening there and we just focus on, Kingston being, the fastest growing market in Canada,
yep.
which it is, and which we were
yep.
just talking about,
yeah.
Coupling it with that,
yeah.
investing in Kingston is, it's everybody says it's a good time. Well, it's always a good time.
Yeah.
But, real estate's a commodity.
Right.
So,
Yes.
yes, it goes up and down, but ultimately there's only so much out there.
Right.
There's
Right.
only so much land. There's
Yeah.
only so much that you can get.
Yeah.
So if you buy it, is it going to go up? Yes. Is it going to go down? Yes. But ultimately, you own something of, a very fixed pie that, it's certainly not going to grow. So,
Right. Yeah.
I mean, Kingston, to me, is one of the best places to invest your money for
Right.
those two reasons. Number one, because it's growing so quickly, and number two, because of the university town.
Right, right.
And
They're not making any more land out there, ain't they?
Yeah, exactly. And talking about the universities, that's something I've always been interested in is the student rentals.
Yep.
What's that yield looking like for? Because it's very different than your traditional. Because you might have 3 bedrooms you rent to a
Yep.
family for $1,500 a month,
Yep.
but with the student housing, you're going per door.
Yeah.
So talk a bit about that.
Well, let me give you an example because I own a few student rentals.
Yeah.
Some multi-units and some single-family homes.
Okay.
So these single-family homes, 5 and 6 bedrooms that we have, they're just like an old house.
Yeah.
Right.
Okay. So you go in, it's just like an old shitty house where you've got your traditional dining room and then you've got a whole bunch of bedrooms.
Right.
Okay.
Okay.
Yeah.
So it's not to have these homes being appraised at $800,000, $900,000, $1 million
Yeah.
is insane, right?
Right.
But
Right.
it's seeing the value or the future value in these properties and how Queen's University is expanding.
Right.
So Queen's University is eventually just going to eat up all these properties. So it's your future value of these homes.
Right.
But
In regards to them coming knocking on your door saying we need the space to expand on our
Yeah.
infrastructure for the school, essentially.
Exactly.
Okay. Okay.
And
That's
the
a good
rent-
point because a popular one that actually did that was York University.
Yeah.
A lot of properties that were around, and I remember hearing about a lot of these older investors that the university came, and I didn't think of that. Yeah, it's awesome
Right.
strategy.
And to finance these things too, it's so to look at the rents. So because we're getting $800 a bedroom.
Right.
So
Okay.
some of these houses are bringing in four grand a month or around
Right.
$4,000 a month.
And what do you get with a bedroom typically?
Closet, bedroom, and you share a bathroom, and
Okay.
you share a kitchen.
Okay.
So
Yeah.
but you get the environment. So you get the being downtown in the university district where you can party and you can do all this
Okay,
stuff. So that's
okay.
what you're paying for is the location.
Yeah, you can walk to the university.
Exactly.
So what does that radius look like in regards to it? How close it is to the school.
You're probably, to be right in the wheelhouse of
Yeah.
where you want to be.
Yeah.
Maybe 1 kilometer.
Okay. Wow.
Maybe.
And those are the properties that go for
Yeah.
$800 a room.
Yeah.
Okay. Okay.
Yeah.
And how many of these rooms can you get in one of the in the typical size house that's bordering that area?
5 or 6 would
Okay.
be,
Wow.
and depending. If you're not financing it, because the banks will only finance up to 6 rooms, and they won't look at it like as on an income-based approach when they're valuing the property.
Oh, no?
So
They
no,
don't look at the cap rate.
no,
Right.
not at all.
Okay.
So
Okay.
you need to paint the picture of why this property is worth $800,000.
Okay.
And how are they going to lend me? Are they going to give me 80% loan to value? Are they going to give me 75% loan to value?
Right.
Okay.
What are they going to give me? Because it's certainly not based on the income, because the income's really not proportional to the real
Right.
life.
Right, because you take the
right.
market rent analysis,
Okay.
which a lot of them are doing when you're buying these properties, and they're looking at, like you said, that 8 bedrooms or 6 bedroom story, you could generate $4,000 a month.
Mm-hmm.
But if it's a single family home, they're taking the market rent, and it might be $1,600 a month.
Exactly.
Especially if it's a lower quality of home, which usually these student rentals are. So
Totally.
there's definitely where you have that issue trying to get into your AAA lender, because they're taking only the market rent analysis and not looking at where your yield could be. It could cover your taxes, your utilities,
Yep.
and your mortgage payment.
Right. So painting the picture looks like, what is it? Is it showing them something in regards to what the school is proposing for its growth in the next 10, 15, 20 years, and how you're within that radius and you're going to get that knock on the door the last 2 years of appreciation? Like, this is the picture you're speaking of.
Exactly. I mean, obviously they're going to pull comparables, so
Right.
Yeah.
they're going to see what everything else is
Right.
being valued
Right.
for around the area.
Yeah.
But I mean, even just something that I always do that I think is undervalued
Right.
in most people's opinion is walking the appraisal with the appraiser. So the
Yeah.
bank's going to
Yeah.
order an appraisal from
Yeah.
whoever.
Yeah.
Maybe sometimes you can pick it, sometimes
Yeah.
you can't.
Right.
But
Yeah.
you should always meet them, because you want to tell them,
Yeah,
okay,
yeah,
look,
yeah.
we redid the roof. Look, we
Yeah. Point
did
things
whatever.
out that they maybe wouldn't have caught if you weren't there to do it, and say, hey, did you know this was going on in the area? And this
Exactly.
is what this guy looks to do, and here's some information to back that. Smart.
Mhm.
Very, very sophisticated investor move right there.
Yeah.
I love that. Because if you can get them to bump the value an extra 100, 150, 200 grand, and you can borrow on that and go up to 70, 75,
Exactly.
80 LTV, that's a lot of money. So
Right.
good on you for doing
Yeah.
that. Very, very.
But on the flip side, if
seasoned
they
investor move.
don't, if the appraiser doesn't come to the value that you need them at,
Right.
then who's putting the extra cash up,
Right.
right? So
Yeah.
Yeah, it goes to the
for
point,
you.
like you're saying, where we're storytellers on the mortgage side.
Yeah.
Storytelling with the appraising side.
Exactly.
That's
Yeah.
what pushes them through. So, talking about that, the different types of lenders that we obviously offer and use, give us a bit of insight of how you got into this. I know we were talking before about how you couldn't use your traditional lender to get in, but you're still able to grow this portfolio, because a lot of people think if you can't do the bank, then the buck
Yeah.
stops here.
Yeah.
So
Yeah.
we've built a pretty solid portfolio
Yeah.
of real estate that I'm pretty proud of, coming from a small town. We grew up with super humble beginnings. So, I wasn't like I was born into this or born into a bunch of real estate.
Right.
We had to kind of, I say this grassroots approach is kind of my approach, because
Yeah.
it's coming from, clawing your way up from something that didn't exist.
Yeah. Yeah.
So, and I'm so glad it happened that way, because it forced me to learn the ins and outs of getting a mortgage, networking with guys like yourself.
Yeah.
And this is exactly how we met, which
Exactly.
is, ironic to this podcast.
Right,
But,
right.
like just cold calling, meeting people.
Yeah.
Because I called a buddy of mine who was VP of Dominion Securities at RBC.
Yeah.
And he's the one who linked me up with you guys.
Yeah.
But I
Exactly.
met him through another buddy. And
Yeah. Yeah.
it's, networking and meeting people is the only way to build your portfolio, unless you're second, third, fourth generation,
Yeah.
spoiled piece of shit.
Yeah.
You know what I mean? Ultimately,
Yeah,
and
it's
I
just
know-
handed to you. You don't know what
Yeah,
you're doing with it. That's
Exactly.
why. That's why,
Yeah.
like 80% of the
Yeah.
time, they blow it up and they lose it all.
Exactly.
Yeah.
And I'm not saying everybody who's
Not
second
all
or
of
third
them, yeah.
generation is like that, but you do see that a lot, and because they're not forced to learn.
Right.
They're not
Yeah.
put in an uncomfortable environment
Right,
where
right.
it's sink or swim. Like
Yeah.
I
Yeah.
remember the very first rental property I bought. We went through a B lender, and it was like $500,000, but I was making like 50 grand a year.
Yeah.
So I had my house, and then I had that.
Right.
And it's like, what if I can't make, like, I couldn't, I had no savings to miss a payment.
Right.
So you're put in this position where your ass is on the fire and you have to.
Yeah. And that pressure, it builds the thick skin, it builds the character, and it really morphs you into a seasoned entrepreneur that, with all that knowledge, experience, and tough times where that fire was burning your ass, it just propels you in what you're able to do in regards to anything you put your mind to. So right now, talking with you, you know, diverting a lot of that energy to the real estate market, what better time given the performance of the overall market? And then you couple that with talking about the outside markets heating up the way they are, you being the kingpin of Kingston, right? And it's just this perfect storm, right? And you've worked your butt off to get where you get. I listened to your podcast and I know a little bit about your story, right? And obviously, as our relationship continues to blossom, I'll know more about it. And it's been inspirational. And tip my hat to you for what you've accomplished.
I appreciate that, brother. Thank you. Thank you.
Yeah.
So what's next on the horizon? You given, like, what are you looking for? Like, are you done with your student rentals? Is there something else you're looking at? I remember once when we were talking, there's that commercial plaza.
Yep.
What's next that's interesting you?
So we've kind of diverted focus from, I shouldn't say we've diverted focus, but we've kind of changed directions in terms of how big we're thinking.
Right.
So one of my mentors, it was funny, we just had a conversation probably, it would have been about 6 or 8 months ago.
Okay.
And I was talking about this guy who owns a massive real estate company. They own about $500 million in real estate. Wow. And I was saying, well, you know, he's done really well and blah, blah, blah. And my mentor had said to me, yeah, that's okay, but it's 500 million. It's not 500 billion.
Right.
And that comment right there, it opened my eyes, and it really, you know, broadened my scope of what is really out there.
Yeah.
The amount of
what are you
money.
measuring up at it? What are you measuring it up
Yes.
against is what that question is. Yeah.
500 million to me as a kid who had nothing.
Right.
I was like, oh my God. Or even to like the people who you're around, like I'm not saying that's not a lot of money,
right.
But he's saying, you know, why not think bigger?
Right.
Yeah.
And, you know, when he said that, and he's into big developments in, you know, all over Canada, but we kind of shifted focus. So we're definitely in the commercial plazas. We love, you know, anything commercial, commercial real estate, and development. So we got 2 development projects going on right now.
Nice.
With existing buildings.
Okay.
But we're going to add floors to them. One's being torn down, and it's going to go up. I think it's 6 or 8 stories.
Nice.
And main floor commercial. And I mean, it's going to be higher end student rentals.
Very cool. So what does that look like? What does it look like to build out in the Kingston area per square foot? What does it look like to acquire commercial real estate on a per square foot? And, you know, how do you go about financing it and then bringing every project to the finish line? Do you retain the asset in your portfolio and grow it like that? Do you release the asset and sell it back? If you do, what do you do with those proceeds? In light of what the podcast is all about in regards to what it would cost, bring us through some numbers and how you've positioned yourself in growing that into what's going to be a $500 billion portfolio.
Well, I mean, that's such a loaded question, especially like with the cost of everything right now. So anybody who's building anything, or anybody who's listening who, you know, you're doing renovations in your house, or you know, you're building a house on a lot or whatever, just to put it in perspective for everybody who's listening, we've all been hit with this, you know, supply and demand issue. And I heard you mention it on an earlier episode. I believe it was the first episode that you guys released, talking about how everything kind of comes back to that, and how it's, you know, everything is driven by that, which seems obvious, but it isn't always obvious. Right. So per square foot, I mean, to develop just to actually, you know, lipstick the main floor that exists, and put a story on and you know, refinish the units, you'd be $450.
Okay.
all day long.
450
all day
square
long,
foot. Right.
and that's
Right.
if you
Yeah.
know
So
what you're doing.
You're doing restoration on the first floor. You're adding a level, right, to bring up the cap of that overall investment and its value on an overall. And to do that, it's in and around 450 a square foot, right? And now to acquire that commercial real estate that needs that lipstick on a pig of the restoration and then the lifting. What kind of a building and what's that? per
I
square
mean,
foot
well,
look
for
like?
example,
Yeah.
we just paid 1.6 million for a property that is the main floor is about 7,000 square feet.
Okay.
And it's got a little bit of parking.
Okay.
So but it varies so much. Like there's no real standard. You can look at the per square foot every single day and it's going to be different.
Yeah. Right.
You know?
Right.
So
General.
that's like, and that was a good buy.
Yeah.
You know, it was actually from my mentor. It was
Okay,
where we
okay.
acquired that particular property.
So you buy it for the 1.6. Mm-hmm. Now you're going to go in and you're going to spend how much, roughly?
Probably about, if all goes according to plan, which as we know it never does.
Yeah.
Probably about, I would say just over 2 is kind of where we're shooting.
Okay. So now you're in for total 3.6.
Yep.
What do you look to do with it at that point? What's the value of it then? What can you get on the renter yield? Just some simple numbers.
So the property itself, it's going to be, CMHC has a product where they will actually they'll insure your loan from the bank, and you can go up to 85% loan to value on like a commercial, multi-unit property. But I think, and don't quote me, but I think it's only if the commercial is less than 30% of the overall value or the overall income and the overall footprint.
Yeah.
So if CMHC is going to come in, that changes the whole landscape of the deal. And that's where the money guys come into play.
Right.
But we're going to be keeping it, which we do with everything. We buy it, we hold it.
Okay.
We'd be looking to refinance. The total value is going to be around $5.5 million.
Wow. Okay. So you see a $2 million lift.
Yeah.
Right.
And if we can pull 85% loan to value,
move to the next project.
Exactly. Exactly. It funds the entire next project. If we can't, typically banks will do 65, 70. If sometimes you can push them a little more, as you guys know, but that's when you get to the finish line. Like I've got a commitment from the bank that says, we love the project. If it gets here, we'd love to, give you some type of a term sheet or a, letter of intent or whatever. But until you get to the end, you never know until the money's in your bank.
Right.
Yeah,
Absolutely.
So you take this, you acquire this property that needs a little bit of work. It's a beat up property. You put some money into it. At the end of it, you go in for a refinance because you did a good job with it, brought its cap up. You're pulling all that capital, putting it back in your pocket, renting it out, holding it within the portfolio in hopes of the market continuing to trend in the upwards.
Exactly.
Build that equity up and then on to the next project.
Exactly.
Brilliant.
And all the money is deployed. All the money you pull out, deployed to the next project.
Right.
Which makes the most sense. A lot of people think, pay it down, get rid of the mortgage,
No.
but it's such a huge investment tool to use. That's that old school mentality, and I love that you're utilizing it and talking about that because that's what a lot of people don't realize. Is like, I want to be mortgage free. I want to be mortgage free. It's like, no, it's like, pay down what your debt is that you owe, but then rip that back out to go move on to the
Give
next.
me more money, please. cheap money. Not what the gangsters charge at 10% a month. 120% a year.
Definitely a way to work, and that's great advice for someone looking to get in. So for yourself, what's the besides Kingston, is there anywhere else you're eyeing?
Belleville's big now, so that's right outside of Kingston. That's where I was born. Belleville's a huge market for people moving from, from down there. We always say, people from Toronto because it's like a lifetime away when it's, 2.5, 3 hours. But Belleville's big. Anywhere, Ottawa's huge right now. Ottawa's exploding.
Yeah, it really is.
And just anywhere kind of in that vicinity. I've always wanted to come up here and develop and invest with the big boys right in Toronto, but
Right.
You know, as you guys know, that's like a big conglomeration of guys who team up and do these development projects, and that's massive, massive dollars that, you know, maybe it's just a pipe dream for me, or, you know, who knows, but, you know.
Nick, don't cut yourself short, man.
out.
What you're doing out there is exactly what the boys are doing here.
Right.
And it's only a matter of time until you feel like you want to move down here, and you'll do just as good down here as you are up there, in my opinion, brother. You're really rocking out, and it's inspirational to know what you're doing to add on to that portfolio, and how you're holding it and then moving on to the next one, and there's no limitations or end in sight, right? So you'll be down here if you want to be down here. You're already here, brother.
Yes. Now with the interest rates coming up, how is that affecting your overall portfolio or your outlook on everything? Because I know a lot of people, they see that hike 0.25, but some get really scared, and some are like, it's okay, let's just keep going.
Yeah, I mean, it's scary, you know, especially if you're really strapped, and if you're somebody who's stretched, like I've done so many times to get into the next project and get in. It's like you don't have that cash flow coming in.
Yeah.
And I always say there's two directions that you can be heading.
Yeah.
You can be in growth mode, or you can be in cash flow mode, but you do not have both. You never have both. You're either growing or you're cash flowing.
Good point.
Right.
Good point.
Yeah, with the, you know, interest rates are going up. Obviously, they need to counteract, you know, what we have going on with inflation.
Yeah.
Because that's it to some degree.
Yeah.
And I mean, we just need to. You need to build in a little buffer, and I don't care how aggressive you are, because I'm aggressive as fuck. But you need to have some type of a little buffer in there.
Yeah.
So when these things happen, and they will,
Right.
when they happen, it's not a catastrophe for your, you know,
your
portfolio. And exactly, because, you know, and an example is we have, so one particular commercial strip mall we have, it's coming up for refinance in April. And my brother and I, we always sit, we've got this whiteboard where we jot stuff out old school and look at the numbers. And it's like a 1% difference in interest rate. So if it's 3%, we're in the green. If it's 4%, we're upside down.
Yeah. Wow.
So,
check that out, eh? Yeah,
you know, so what do we do? You know, obviously we're not going to max it out if we're going to be upside down, but we're looking at it to say, you know, holy shit, that is a big deal.
Right.
So, you know.
And that's what I find it really affects is you gotta look at the bigger numbers. So if you're borrowing millions of dollars, that's where that interest rate is really killing you. Where I try to explain to some clients right now, like, you know, don't be scared. If you're borrowing you're borrowing 800,000 or $1 million. Yeah, it's small margins compared to what you're saying, which is really insightful. That half a point to that point could in the green or upside down. Right, because of the scale you're borrowing.
Exactly.
Yeah. And it's funny, like from a homeowner's perspective, they're looking at it from a total different standpoint than an investor's, standpoint, looking at that entire portfolio and how much that 1% actually makes a huge difference. Right. So thank you for tuning in once again to What Would It Cost, and big shout out to Nick here, our guest. Thank you for driving all the way down from Kingston and giving us your time.
Really
I know you're a very busy man, and it was an honor to host you here, and we're excited to have you.
My pleasure, guys. It was an honor to be on here, and great to meet you guys in person.
Yeah, exactly.
Absolutely.
All right. Thank you again for tuning in. Be sure to check us out on all our socials and streaming platforms, and we'll see you next week.
Next on What Would It Cost?
The podcast has been an eye-opener.
Right.
More than anything. Doors have just opened.
Yeah.
On potential possibilities for me. It's real estate focused for realtors.
Yeah.
It's a real estate podcast for agents. So majority of my viewers and audience is other agents.
Yeah.
When selling a property now, so are you still bringing that same social media values, like a one set package, like you're selling with Mac and Poli?
Yeah. I do the same style marketing videos and same kind of package for each listing. Yeah. And I go balls to the wall with the marketing because it's my brand. So
I think you definitely have to. Like Realtor.ca is not going to cut it anymore. You know what I mean?
Yeah, for sure.
Have the pictures and post it and hope someone's going to come across it.
Yeah. So I do the whole Instagram ad spend, all that.